Hello everyone. Guess what? Debt is back. And today we are going to discuss something unique. The DSP Income Plus Arbitrage Fund of Fund. Sounds technical? Then not worry. We are going to break it down for you. And for that, we have got Shantanu with us. Hello Shantanu, welcome on the show.
Hi Tushar, thank you for having me.
Let's get it straight. This fund has been positioned as something unique within the traditional debt category. What makes it very unique?
So Tushar, it is a unique strategy because it's not a standard debt fund. It combines arbitrage as well as debt. About 60% is in debt and 40% is in arbitrage. It also has tax advantages because if you hold it for more than 2 years, you are taxed at 12.5% compared to marginal tax rate, which a lot of debt investors have been missing.
Traditionally, we have seen debt category is very popular with institutional investors or high net worth individuals. And in last 2-3 years, what we have seen is retail investors have ran away from debt category completely. So does this fund suited for retail investors also?
There are a lot of retail investors who have been holding FDs for a long period of time. A lot of retail investors have also been holding liquid funds for more than 2 years. It's very well suited for those investors, as if you hold this fund for more than 2 years, it becomes tax efficient. Also, for a lot of FMP and target maturity fund investors whose funds are coming up for maturity in the next 6 to 8 months, 1 year's time, it's going to be a good opportunity for them to reinvest that money in Income Plus Arbitrage Fund because they do not lose the tax advantage. Also, there's a possibility of getting a better return compared to the current returns that they have been making right now.
Shantanu, you mentioned about tax advantage 2-3 times. Let's make it real for our viewers. When you are investing into an FD or a traditional debt fund, compared to that, how this particular fund will fare when it comes to tax angle?
You know what? If you're making 7% return on your FD or a debt scheme, your post-tax return would be 4.9% because 30% the government is going to take 30% of it.
Marginal tax.
Yes. But if you're holding our scheme for more than 2 years, then the taxation is going to be only 12.5%. So your post-tax return increases from about 4.9% to about 6.1%. That's a huge difference.
This fund is for whom? Is there any specific investor profile or time horizon?
I think this fund is for everyone. For asset allocation, for conservative investors, for investors who've been putting money in FMPs, in target maturity funds, in liquid funds, people who are looking for an alternative to other asset classes where they're scared of the downside risk. So it covers a very broad investor horizon.
The current scenario, interest rates are falling. What if arbitrage opportunities also shrink? Then what happens with the fund?
This fund is designed to switch between the two funds, right? Between debt and arbitrage. If arbitrage spreads shrink, then we reduce the allocation to bare minimum 35% that is required in arbitrage, and we increase the allocation to the debt portion. And if we believe that the yields are lower and arbitrage spreads are better, then we increase the allocation to arbitrage.
Shantanu, but whenever we think about fund of fund, the first thing which comes in my mind is that cost would be on the higher side or the complex structure. So how do you answer this?
So definitely cost is going to be slightly higher, but the advantage is much better compared to the cost.
When people hear about debt fund, arbitrage, they think कि इसमें तो risk ही नहीं होगा. But there would be some risk, right? Can you throw some light on that?
All investments do carry risk and relatively safer, relatively lesser risk, but definitely debt also has risk because there is interest rate risk. If the yields move on the upper side, there could be some mark-to-market risk. But we manage our funds in a very disciplined manner. The fund returns should be more balanced, and the credit risk will also be relatively much lower because we invest the funds only in our DSP internal funds, and we have a very stringent credit risk policies for our funds, and we adhere to that in all our funds.
But Shantanu, what if I invest today, but I want my money immediately, maybe in 6 months or 1 year? So is there a lock-in for 2 years?
There is no exit load in our scheme. You can put your money and you can redeem the money the next day. You'll get your money immediately. However, if you're coming with this scheme, we would advise you should at least have a 2-year horizon, because your investments become more tax efficient. If you remove your money before 2 years, you lose the tax advantage and it becomes like any other scheme.
Why now?
So there's a lot of uncertainty in the market right now. There's a lot of volatility in a lot of asset classes. We believe the interest rates have peaked, and the probability of interest rates rising is much smaller than the probability of interest rates going down. That this scheme brings debt as an investment back on the horizon of a lot of investors.
So finally, debt is back.
We believe so.
If you're looking for a smarter avenue, a tax efficient way, and if your investment horizon is more than 2 years, then DSP Income Plus Arbitrage Fund of Fund is worth considering. For more details, you can talk to your financial advisor or visit our website www.dspim.com. Until next time, continue to invest for good.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.